Hey guys, welcome back to Smart Wallet and Me, where financial wisdom matters. In today's video, I want to discuss again about Alibaba and some new developments and why their stock has dropped about 3.2% today. So let's get right into it. So guys, there's an article here on CNBC that says Alibaba and two other firms fined for not reporting deals to the Chinese regulators. And also just from breaking news, it looks like Attorney General William Barr has resigned effective December 23, just up here. Anyways, that's not what I wanted to talk about, but I wanted to talk about Alibaba here. So Alibaba and Tencent backed China Literature and Shenzhen Hivebox Technology were each fined 500,000 won or $76,463 by the State Administration for Market Regulation. While the fines are very small, the moves signal further intent from Chinese regulators to punish and regulate technology firms. Last month, the SAMR published draft rules looking to stop monopolistic practices by internet platforms. It is one of the most wide-sweeping proposals in China to regulate large tech firms. And guys, these fines that were placed on these two companies were based on deals that were done back in 2017 and 2018. If you look here, China Literature makes stellar public debut following 1 billion Hong Kong IPO. That was November 8, 2017. And then if you read this other article, it says Alibaba is buying Chinese mall operator InTime for $2.6 billion to modernize offline retail. Again, that was January 2017. And also Tencent spin-off China Literature to buy New Classics Media for $2.2 billion in content consolidation play. And that was also in August of 2018. So as we can see a trend here, all of these mergers and IPOs were back in 2017 and 2018, but yet the government is cracking down right now in 2020 and trying to put the rules down in place so that they can be more governed rather than just do whatever they want. Alibaba has in recent years been expanding into offline retail in part through aggressive acquisitions. Tencent, which has built up a digital entertainment empire, has similarly invested in outside partners to help broaden its territory. The companies failed to seek regulatory clearance, though neither deal was deemed to be excluding or restricting market competition. As such, the market authority ordered a fine rather than a breakup in accordance with China's antitrust laws, it said. So even though they're not being monopolistic in their endeavors, but they failed to comply with the regulations and trying to update the regulators by filling out some paperwork, they are now being fined for a very small amount, but it still shows that the Chinese government is cracking down on these tech companies so that they don't do whatever they want to do. They need to follow the rules like everybody else does. And then earlier this year, Tencent came up with the idea of trying to merge China's esports archivals Douyu and Huya together. And now even the Chinese government is trying to regulate and investigate this entire merge to find out if anything was done illegally so that they can crack down on them as well. The merger between game streaming giants Huya and Douyu, both Tencent backed, is also under investigation by the antitrust regulator. The Alibaba and China Literature cases mark the first time that China has fined companies structured as variable interest entities over the market concentration violations. So guys, this is very interesting about what's going on in China and how the Chinese government is really cracking down on these companies, especially Alibaba and Tencent. And they're investigating things going back to 2017 and 2018. And just recently, as of August of 2020 of this year, they're trying to see if there was anything that was done illegally so that they can find them or even break them up so that there would be no monopolistic environments in China so that the small entrepreneur can develop their own business and not be suffering because these big conglomerates are taking over the market share, and they want to make sure that everybody has an equal amount of space to operate. Now let's take a look at the stock chart here for Alibaba. We can see here from the 1-year chart that we are now trading right below the 50-day moving average of $284.49, but yet we are still above the 200-day moving average of $244.14. So guys, the stock is now trading at $256.03. It is $8.51 down, a 3.2% lower than what we were last Friday. And you can see here from the chart that This stock has been trading sideways for a long time, and I mentioned last time to you guys when I did the Fibonacci analysis tool that we were still about the 38.2% retracement level, and we were around close to the 50%, and it looks like we might be hitting that 50% retracement level mark very soon, and we might even go back down to the 200-day moving average of about $244. So guys, let's look at the Fibonacci analysis just to be certain that I'm not making this up. You can see here it tested the 38.2% retracement level here on November 18, and then it almost came down to that 32% retracement mark again today, but it didn't quite hit it. We were very close, but if we do hit that, we can either bounce back off and go back up again, or we could fall back down to the 200-day moving average of 244, possibly even lower than that. We'll have to wait and see what's going to happen. So guys, the resistance right now is about $265, and the support that you should put on is around 176, but I would say even a little higher than that. I wouldn't go that low. I would probably put it closer to the $230 range. I still think that this stock has some more room to grow depending on what kind of news comes out, but this stock has really been battered with bad news over this last few months, and it has still been able to keep its sideways trade, and it has gone a little bit lower, but yet still maintaining that 200-day moving average. And if we look here, the RSI strength is at 37, and the momentum is at -14, which is very negative for the company. And also the M flow is around 35. And if it's below 20, it's oversold, and if it's 80, it's overbought. So right now it's around 35, so it's getting to that point where it could be oversold very soon if it touches this 200 moving day average, in my opinion. Again, I'm not an advisor here. I'm not trying to tell you what to do. I'm just bringing out the news to you guys and sharing my information as far as what I know and sharing it with you guys, and letting you guys decide if you guys like this stock, if you guys are investing in it more or waiting right now. I would love to hear what you guys have to say. But anyways, if you guys like this video, please give me a thumbs up, like it, and subscribe to my channel if you haven't already done so. And I look forward to hearing from you guys soon. Thanks for watching.